Welcome to Earnings Central. In this video, we'll break down Commercial Metals' first quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q1 was $1.85 billion. The company actually reported revenue of $1.91 billion, surpassing expectations by 3.2%. However, this quarterly revenue marked a 4.5% decrease compared to the $2 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q1 was 79 cents. The company actually reported an EPS of 78 cents, missing expectations slightly by 1.3%. This result also reflects a significant 52.1% decrease compared to the $1.63 reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. CMC delivered core EBITDA of $210.7 million in the first quarter. While this represents a decrease from recent quarters, it still demonstrates solid profitability with an 11% EBITDA margin. The North American Steel segment continued to be the primary earnings driver, generating EBITDA of $188.2 million despite some market pressures. Over in Europe, the steel operations contributed $25.8 million in EBITDA, helped by annual CO2 credits but facing ongoing market challenges. From a balance sheet perspective, CMC maintains an exceptionally strong financial position. The company's total liquidity stands at nearly $1.7 billion, combining cash and available credit facilities. Their net debt-to-EBITDA ratio is sitting at a very conservative 0.6 times, giving them significant flexibility for future investments and shareholder returns. Speaking of cash generation, the company produced $213 million in operating cash flow during the quarter, showing continued strong cash conversion of their earnings. Now, let's shift focus to some of the key insights and takeaways from the earnings call. One surprising trend was the unusually strong late-season construction activity. Several regions saw construction projects continuing further into the winter months than typical, as contractors worked to catch up from weather-related delays earlier in the year. This helped drive steel shipment volumes higher than seasonal expectations. Infrastructure spending is emerging as a major growth driver for CMC. The company reported strong current demand from infrastructure projects, with state DOT representatives indicating they have years of work ahead. This isn't just a short-term boost. We're looking at a multi-year trend that should provide sustained demand for CMC's products. The company's Operational Excellence Initiative, called TAG, Transform, Advance, and Grow, is already showing promising results. Management highlighted two specific examples that are expected to generate $10 to $15 million in annual savings, with more than 150 similar initiatives in the pipeline. This program appears to be more comprehensive than previous improvement efforts and could meaningfully impact margins over time. There was positive news from the Arizona 2 facility, which achieved consecutive monthly production records at the end of the quarter. This is particularly significant because it's the world's first micro mill capable of producing both rebar and merchant bar products. The company expects to reach full capacity of 500,000 tons annually by the end of fiscal 2025. The European business continues to face challenges, primarily from import pressure. Rebar imports into Poland are up 50% year-to-date, with German imports specifically up 75%. This has created margin pressure despite improving Polish domestic market conditions. However, the company maintains cost competitiveness and remains profitable when including energy credits. Looking ahead, there's growing optimism about business conditions for 2025. Management noted that customer sentiment has improved significantly in recent months, with construction confidence hitting its highest level in over 2 years. This positive shift in sentiment, combined with strong underlying fundamentals like infrastructure spending and reshoring trends, suggests that current market softness may be temporary. That wraps up our recap of Commercial Metals' first quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.